Hello, everybody, and welcome to the 70th edition of LM's Weekly Wrap, our weekly program to cover the market related developments. This week started on a bit of a shaky note because most of the global markets were worried about the geopolitical tensions as well as the Federal Reserve meet, and I think the Federal Reserve commentary did give some relief to the markets. We saw some relief with respect to the crude oil prices, etc. The earnings season continues with a very swift pace, and we've seen a lot of companies declare the numbers from across the sectors. But first, I welcome Jash to the show. Jash, welcome to the show, and kindly take us ahead with respect to the market related developments.
Thank you so much, sir. It's great to be back after last week. We ended a last week in a slightly better note than what it had started. This week also we've been seeing some kind of cheer. As sir said that in the start we were the markets were quite shaky and waiting for the Fed commentary and the geopolitical issues. Last week I had mentioned that the market had gone down to 18,800 levels, and I think we have had about a 400 to 500 pullback rally right now. It is maybe only a relief rally. India is much better than the global tensions and global economies. So we are poised for growth, but when we don't know. So we need to wait and watch. Every rise might be an opportunity to sell, and every dip is an opportunity to buy. So keep selling and buying, and then buying at lower ranges, so that we are all geared up for the growth that India expects in the next 5 years. Of course, it's not a short-term view; it's a very long-term view. But as far as our economy is concerned, India is extremely resilient. Of course, food inflation is something that we need to worry about. But I think the government is taking adequate steps to control those. Coming on food inflation, onion prices have skyrocketed right now in the last 1 week after tomatoes. But I think this is a trend. This always happens, and then it is a exceptional part when they increase and then they stabilize and fall down. So I don't think we need to worry about that. Coming to the Fed remarks, they did not rise their rates, and that is what was cheered by Dow Jones in the last two sessions. I think Dow Jones was up about 800 to 1,000 points in the last two trading sessions. So that has been cheered up. Even Nifty has reacted positively, and we are about 150 points up today on Friday, that is. All in all, I think this is where I stop for the global and domestic commentary, and I'll hand over to Nirav sir, which will give more outlook to the sector specific and company specific, as it has been a result heavy week. Hence, over to you, Nirav sir.
Yeah, thank you, Jash. And we start off with the roundup of the different sectors where we've seen results being announced by companies. First of all, the auto sector, which is considered to be the mother sector for any economy. The auto sector has been doing really quite well, which we have highlighted since the last few sessions. And true to that reputation, I think we've had a few developments with respect to the auto sector. One is the monthly auto sales numbers. The market gave a very muted reaction to the monthly auto sales numbers, though the monthly auto sales numbers were quite strong. And particularly, I'd like to mention the two-wheeler stocks. I think Bajaj Auto, Hero MotoCorp, TVS Motors, all have declared very good numbers as far as the monthly auto sales is concerned, and they have declared good quarterly numbers as well. The quarterly performance has also been quite strong. So I think market has cheered the two-wheeler makers. At the same time, we've seen very good numbers coming in from Tata Motors yesterday, and we've seen good results coming in from Maruti. But as we've seen in the market since last week, so market was quite shaky. We've seen there's no sector leadership as such in the market. The market has just cheered the results of Reliance Industries, and barring that, I think even the auto sales numbers have been largely discounted by the markets. But nonetheless, I think this growth story continues quite well in a festival season. And today we have the numbers of Escorts, Kubota, which are expected. We have the numbers of SML, Isuzu. So I think auto has been a very, very resilient sector in many ways. Though last week the sector did not perform to the expectations in terms of stock market performance. After this, we come to auto ancillaries. We've seen tire stocks perform exceptionally well. After CEAT, we have JK Tire, which has declared very strong set of numbers. So tire sectors have been tire stocks have been on a roll. The next sector which we are covering is banks. I think private sector banks have given a decent performance, but I think markets have been largely indifferent to the performance of the private sector banks. Markets have neither cheered this performance nor have they given any downside to the banking sector stocks. At the same time, we've seen PSU banks which continue to perform quite well after the strong performance of Canara Bank as well as PNB. As far as the NBFCs and the private sector banks are concerned, I think the NIM seems to have peaked in Q4 of FY23, and the cost of borrowings have started going up, inching up. So I think definitely the NIMs are likely to come under pressure in the near term. So the valuation is something which will hover in the current range. So expect a very sluggish reaction as far as the banking sector stocks are concerned. The third is cement. We've seen very good performance from the cement sector, while the volumes have been a bit under pressure, but the cost pressures are abating. The cost pressure has been moderating, and that is a good sign as far as the cement sector is concerned. Market was particularly quite bullish with respect to Ultratech Cement. Yesterday we had JK Lakshmi, which has also delivered a good set of numbers. They've given good volume growth as well. But overall, if one were to look at the cement sector, we are seeing the volume growth is struggling, but the cost pressures have been abating and moderating, which has helped cement companies post better quality of profits. Capital goods sector continues to do very well. We are seeing the infrastructure story do perform very well. We had the bellwether of India's infrastructure sector, L&T, which has performed quite well, and it has given a very strong guidance. Consolidated order book is very, very strong, and they've been boosted by the performance of the hydrocarbon sector, where they've received very strong orders. So infrastructure story, even the small capital good makers like Alicon Engineering or the likes of Triveni Turbine, all these companies have declared very good numbers. We've seen Blue Star, which has declared good set of numbers. So I think the capital goods space is in a sweet spot, and I think now market will look forward to the larger players, like what is going to be the performance of stocks like Thermax or Cummins or ABB, etc. So that is something which will be important to monitor. After this, we have metals. In metals, we've seen steel stocks which have largely disappointed, though the domestic demand continues to be very, very strong. But India has become a net importer of steel because the global demand is very, very subdued. So there is the pressure of dumping into the Indian markets, resulting in India becoming a net importer of steel. So during this week, I think we had results of JSW Steel, Jindal Steel and Power, Tata Steel, where market has given a cold shoulder to the numbers. Next sector which we are going to cover is FMCG. In FMCG, I think we had Britannia and Dabur, which have reported good set of numbers, relatively good set of numbers. But if one were to look at the FMCG space, then I think Nestle is a stock to watch out for, because we've seen a lot of pressure with respect to HUL. HUL has been under quite some pressure. Britannia also volumes, nothing really much to write home about. But Nestle will be a sector to watch, a stock to watch out for, because the stock goes in for a stock split very soon, and after the stock split, there's a good possibility of the liquidity increasing on the counter. Plus, the stock has performed quite well in the recent past. Now, the next sector which we'll be covering is pharma. I think pharma has emerged as a defensive bet in the market, and as we've already pointed out that the Cipla remains our top pick over there. Cipla has been a large cap story and remains an attractive valuation. Apart from this, we are seeing Lupin, which is looking quite good in trade. Stride is also looking good in trade. So overall, I think Divi is also looking quite good. Pharma continues to be in a sweet spot, at least as far as the near term is concerned. IT sector and chemical sector are the two sectors which have been under tremendous pressure. IT sector, where we've seen the lot of downgrades which have been happening. We've seen that we've already discussed. But the recent addition is that the manpower addition in this sector is at a 25-year low. For the first time, it's seen a dip in the last 25 years. So I think this is a cause of concern because this is manpower-oriented industry, and if the order pace is slowing down or the execution of the orders is slowing down, definitely it's not a good sign as far as the IT industry is concerned. As far as chemical industry is concerned, the sector is struggling with the inventory destocking, and I think that's going to have an impact as far as chemical across the board is concerned, whether it is agrochemicals or specialty chemicals, etc. The entire industry is witnessing a destocking exercise which is likely to last for the next couple of quarters. So be very, very cautious while entering into the chemical stocks. And today, as we discussed, I think hospital related stocks have been doing quite well. We are seeing good momentum in diagnostic as well as the hospital stocks, particularly Apollo Hospital or the likes of Narayan Hridayalaya or Healthcare Global Enterprises, Jupiter Hospitals. I think a whole host of hospital-related stocks have been doing quite well in trade. Finally, our pet theme, that is railways. Railways continues to do well. We've maintained that this is a multi-year story, so stay invested, and any downturn should be used as an opportunity to accumulate the stocks. Many more things to discuss, but time permits no further, so I hand over to Jash for the closing commentary.
Thank you so much, sir. Thank you for the insightful session on each sector. And we'll definitely meet next week for some more update on the same. Thank you.
Thank you.